In this video, we are going to learn about petty cash book. First, we'll see what is petty cash book and why business organizations are using petty cash book. Petty cash book is one of the types of cash book. As you know that the cash book are of three types. First one is single column cash book, second is two column cash book, and the third one is petty cash book. Petty cash book is one among them. In other cash books, we record all kinds of receipts on the debit side and all kinds of payments on the credit side. But in the petty cash book, we only record one type of receipt on the debit side. That is nothing but the opening balance of cash amount, and on the credit side, we record lot of petty payments. Now, what are petty payments? Petty payments are also called as small payments. These small payments made for the expenses that occur repeatedly, means continuously, but not a part of regular business. In other words, we can say that these are office expenses or indirect expenses. Now we will see which are considered as petty expenses and which are not considered as petty expenses. Expenses like traveling, postage, telephone, wages for labor, repairs, refreshments like tea, coffee, etc. are considered as petty expenses. These kind of expenses will be recorded in petty cash book. These petty expenses are paid through coins or max to max currency notes rather than paying in checks. Now, we will understand what kind of expenses we should not consider it as petty expenses, so that we will get to know which needs to be recorded in petty cash book and which should not be recorded in petty cash book. Other expenses like purchasing raw material, purchasing furniture and machinery, charging depreciation on fixed assets, creating a provision for bad debts, these are not considered as petty expenses. These type of expenses should not be entered in petty cash book. Now we'll understand the purpose of petty cash book. What is the purpose of using petty cash book? To record cash receipts and cash payments, we use cash book. But when we start recording all petty expenses in the cash book itself, rather than recording in petty cash book, the cash book becomes bulky and it looks cumbersome, and also it looks so congested. And it is difficult for the cashier to manage all entries in the cash book. In order to avoid this complexity, the main cashier gives some amount in the beginning of the month or beginning of the week or fortnight once to the petty cashier to manage these small expenses. Here, main cashier means the one who gives us the opening balance amount for our petty cash account. He is called as main cashier. The one who receives the balance and enters the entries into petty cash book is called as petty cashier. If the petty expenses are less, then the main cashier may give the amount to petty cashier monthly once. If there are more expenses, then he would give weekly ones, so that it will be easy for the petty cashier to submit the vouchers to the main cashier for these petty expenses. And also it will be easy for the main cashier to reconcile the entries for the given vouchers. Petty cash book can be maintained in two ways. One is ordinary system and the second one is Imprest system. In ordinary system, some lump sum amount is given to petty cashier to maintain petty expenses at the beginning of the month. At the end of the month, once the amount is completely spent by petty cashier, the petty cashier submits the supporting vouchers to the main cashier for all the payment entries made in petty cash book. Restoring the petty cash account depends on the main cashier. After checking the expenses, if the main cashier decides to continue restoring the petty cash account, then he will reimburse the petty cash account. Otherwise, they may stop using petty cash book. In Imprest system of petty cash book, a fixed amount, which is also called as float amount or Imprest amount, will be given to petty cashier at the beginning of the month or week or fortnight once, depending upon the petty cash expenses. Once the given period ends, for instance, the main cashier has given some amount to petty cashier for 1 month. At the month end, the amount spent will be restored or reimbursed back to the petty cash account so that the fixed amount is maintained. Let's understand this with an example. For instance, A is the main cashier and B is petty cashier. Let's assume this. And A is giving to B as a sum of 1000 rupees at the beginning of the month. B is considering this 1000 as an opening balance for petty cash account. At the end of the month, B submits payment vouchers worth rupees 900 to A, that is main cashier. And A subtract the total payments amount from the opening balance, that is 1000 minus 900. Remaining balance would be 100. This remaining balance is called as cash held. In the Imprest system of petty cash book, A again restores, that is the main cashier again restores the spent amount. Here in this case, the spent amount is 900 to the petty cash account. So the balance of petty cash book is reimbursed or restored. The rule for Imprest system of petty cash book is cash held plus petty cash vouchers is equals to fixed float or imprest amount. If we relate this with the previous example, with the formula, cash held plus petty cash vouchers is equals to fixed float amount. In previous example, the cash held amount is 100 and the petty cash vouchers that the petty cashier submitted to main cashier is 900 worth. So, 900 plus 100 is equals to 1000. This 1000 is considered as imprest amount or fixed float amount. Now we will see types of petty cash book. We can maintain petty cash book in two ways. First is simple petty cash book and the second one is analytical petty cash book. When we should use simple petty cash book and when we have to use analytical petty cash book. Simple petty cash book can be used only if there are few transactions. That means few petty expenses. Analytical petty cash book can be used if there are more expenses and also if the expenses are repeating again and again. So in this situation, we can use analytical petty cash book. For instance, if you take the below example, here we have only 8 expenses and none of the expenses are repeated again. So in this scenario, we can use simple petty cash book. If any of the expenses like postage or casual labor or taxi hire or writing pads and registers, cartage, bus fare, any of the expenses is repeated, then we have to use analytical petty cash book. Now we'll see the proforma of simple petty cash book. In the amount received column, we'll mention the opening balance amount. That is the amount that is given to petty cashier at the beginning of the month. That amount will update in amount received column. And the second column is date column. In the date column, we'll mention the transaction date. Voucher number. Voucher number means when we make payments for the expenses, we receive a bill for that in return. So the number which is there on the bill is called as voucher number and that number we'll update in this column. The next column is particulars. In the particulars column, we will update the name of expense account. For instance, we have paid amount for stationery. Okay, so that account will be updated under particulars column as by stationery. The last column is amount paid. In the amount paid column, we will mention the amount that we have paid for the expense. The second one is analytical petty cash book or columnar petty cash book. The first 5 columns are same as simple petty cash book and the next 7 columns varies according to company's expenses. For example, if I have wages in my transactions or repairs in my transactions, more number of transactions, then I will put a separate column for wages and repairs. I have segregated the expenses according to the categories. You can refer this chart and record the transactions in the respective categories. Now we will see the problem. Here, a petty cashier in a firm received 20,000 as a petty cash imprest on 4th September 2020. During the month, his expenses were as follows. Here he has provided us the expenses that had occurred during the period and also he is asking us to write up the analytical petty cash book and draft the necessary journal entries for the payments made. First we will post these transactions into petty cash book and then we will prepare journal entries. Here our first transaction is opening balance. The problem states the petty cashier has received 20,000 as the petty cash imprest. That means it is considered as opening balance amount. Imprest amount means when you are giving amount in advance to anybody, that is called as imprest. So here the petty cashier has received amount in advance for maintaining petty cash account, that is 20,000. So this is considered as opening balance. To record opening balance, we will update to cash account in particulars column and mention 20,000 in receipts column, and the date is September 4th. This is the only receipt amount that we update in the petty cash book. Rest all will be the payments. As you guys already know that if we are posting any transactions in ledger books, on the debit side we use to before the account name. On the credit side we use by before the account name. Here in petty cash book we post all payments. We don't post any receipts except the opening balance. So for opening balance amount in particulars column we will update to cash account. For rest all the payments we will update by and followed by account name. Our next transaction is on September 4th, traveling or conveyance charges for supervisor's visit 500. So we have paid traveling charges for supervisor's visit. For this transaction we will update by conveyance and travelings account in the particulars column because it's a payment, so we are using by before the account name, and mention the transaction date in the date column, that is September 4th, and the total amount paid for travelling expenses is 500. The same 500 we will mention in conveyance and travelling category. Our next transaction is wages paid to labourers 1500. That means we have paid wages to labourers on September 5th and the amount is 1500. For this transaction we will update by wages account in the particulars column and mention the date as September 5th in the date column, and the total amount is 1500 in the total payments column, and we will mention the same amount in the categories. Since wages is considered as sundry expenses, I have mentioned wages amount in sundries column. But if there are more number of transactions related to wages in the problem, then we will create a separate column for wages and update that amount in wages column.
Our next transaction is on September 6th, bus, auto or taxi fare to workman for customer premises worth 200. So here we have spent amount for taxi fare. So any kind of fare comes under travelling and conveyance expense. You have to mention by conveyance and travelling account in the particulars column, and the date is September 6th and amount is 200 in total payments column. The same amount we will update under conveyance and travelling category because we have spent money for travelling expenses.
Our next transaction is on September 7th, stationery purchased for 1000 plus CGST and SGST at 6% each. For this transaction, first we will calculate the tax percentage and then we will update the value in the petty cash book. Okay, so the stationery value is 1000 and 6% is equals to 1000 into 6 by 100, which comes to 60. We have to update by stationery account in the particulars column and amount including GST in the total payments column, and in the stationery column we'll update 1000 excluding GST, and in input GST column, input CGST column we'll update the GST amount, that is 60, and input SGST column will update another 60, because in the problem it states that 6% on each. So 60 for CGST and 60 for SGST. Our next transaction is on September 8th, sent documents to head office by registered post 500. The transaction states we have sent the documents to head office by registered post. So registered post means it comes under postal and telegram column. So we have to update by postage and telegram account in the particulars column, and the date is September 8th in the date column, and the amount is 500. The same amount we will update in postage column, postage and telegram column. Our next transaction is on September 9, postage stamps purchase 1000. So this is also related to postal. So we will update 1000 in total payments column and also in postage column. Our next transaction is on September 11th, repair of computer 400. So we have spent money to repair the computer, that is 400. All these repairs are considered as sundry expenses. So we'll update this 400 amount in sundry expense column. For instance, if there are more transactions with repairs, then we can create a separate column for repairs and update all repairs amounts in that column. I have mentioned by repair account in particulars column, and the transaction date is September 11, and the total payments column I have mentioned 400 because 400 we have spent to repair the computer. In sundry expense column I have mentioned 400. Our next transaction is on September 12th, paid electricity bill 1700. Electricity bill expense is considered as sundry expense. So we will update 1700 amount in sundry expense column and update by electricity account in particulars column. So date is September 12th and by electricity bill in particulars column, and in the total payments column 1700. Since electricity bill is considered as a sundry expense, I have updated 1700 in sundries column. Our next transaction is on September 13, wages paid for shifting furniture, that is 400. Shifting comes under transportation or cartage expenses. So whenever we see shifting furniture or transporting goods or carrying some goods to another place, then we have to consider it under carriage category. So I have updated by carriages in particulars column, and the date is September 13th. In the total payments column the amount is 400, and the same I have updated in carriage column, carriage category column. The next transaction is September 14th, letters by registered post sent to different suppliers 1000. So we have sent some post to our suppliers through registered post. Again this will fall under postal expenses. So we will mention this 1000 in postal and telegrams column. Date is September 14th and by postage and telegram account in particulars column, and in the total payments column 1000, and this 1000 rupees again in postage and telegrams column. Next transaction is on September 15th, locks purchased for 800 plus CGST and SGST at 6% each. We will calculate the tax first and then we will post into petty cash book. The log's value is 800 and the tax percentage is 6%. So 800 into 6 by 100 comes to 48. So this tax amount we will update in CGST and SGST column. Date is September 15th in the date column and by logs purchased account in the particulars column. Here I have included the amount with GST, that is 896, and logs are considered as, purchasing logs are considered as sundry expenses. So I have updated 800 in sundries column and 48, that is a tax amount, in input CGST and input SGST columns. Our next transaction is on September 16th, refreshment to customers 200. Refreshments are considered as sundry expenses. So we have to mention this 200 in sundry expense column. The date is September 16th in the date column and by refreshment account in the particulars column and 200 in total payment column and in 200 in sundry expense column. And now we have posted all the transactions into petty cash book. We will add the amounts in each and every category. The total amount for total payment column is 9,416. So this is the total spent amount for the particular period. And the total amount for postage and telegram column is 2,500. For stationery 1,000, for conveyance and travelling 700, carriage is 400, for sundry expenses 4,600, input CGST is 108 and input SGST is 108. If you add all the categories amount, you will get this total payment amount. As per the balancing rule, we will mention the highest amount on both the sides. The receipt side total is 20,000 and the payment side total is 9,416. So 20,000 is highest amount. We have to update 20,000 on both the sides. Now we will deduct 9,416 from 20,000. That comes to 10,584. For this balance, we will mention by balance carried down in the particulars column. So the same balance we will bring down to the next month beginning. That is, the date is October 1st and we will mention the balance brought down amount, that is 10,584 in the receipts column, and mention two balance brought down in the particulars column. As per the Imprest system, the petty cashier has to submit the payment vouchers to main cashier at the month end. So once we bring down the amount to next month, the petty cashier's duty is to submit the payment vouchers. The main cashier reviews the payment vouchers and restore the amount back to petty cash account. In this case, he has restored the total payments amount, that is 9,416 to petty cash account. So we have mentioned two cash account in the particulars column. This is how we prepare petty cash book. Now we will see how to prepare journal entries for these transactions. All these journal entries are recorded by main cashier, not the petty cashier. So we have to record the journal entries in main cashier's point of view.
So our first journal would be when the petty cashier receives money from the main cashier. That is, he has received 20,000 rupees from the main cashier on September 4th. So for this transaction, we will record petty cash account debtor to cash account, because while transferring amount to petty cash account, the main cashier presumes that petty cash account is an expense. So he is debiting petty cash account and crediting to cash account, because cash account comes in real account. The rule for real account is debit what comes in and credit what goes out. So cash is going out to petty cash account. That is why we are crediting cash account. Our second journal would be for the expenses that we have recorded in petty cash book. Here I have taken all categories of expenses and I've mentioned all the respective amounts in the debit amount column. All expenses comes under nominal account. The rule for nominal account is debit all expenses and losses, credit all incomes and gains. So we are debiting all expenses and crediting to petty cash account because we have paid through petty cash account. Cash comes under real account. So the rule for real account is debit what comes in and credit what goes out. So the cash is going out. From where it is going out? From petty cash account. So we are crediting petty cash account. The total amount is the total payments that we have spent in petty cash account. So that will be the total amount. That is 9,416. The narration would be petty expenses posted to petty cash account. The third journal is petty cash account debtor to cash account. The narration is cash paid to petty cashier and the amount is 9,416. That is the total paid amount. And on the credit side, we have mentioned 9,416. We are writing the same transaction again on the month end because as per the Imprest system, the main cashier will reimburse the Imprest amount on the month end. That is the reason we are again debiting to petty cash account and crediting to cash account. And how much he is reimbursing? Whatever we have spent. So that amount is reimbursing to maintain the Imprest amount.
We have recorded the transactions in petty cash book and we prepared the journals in petty cash book. So this completes petty cash book. If you have any questions, please post in the comment section below, and if you guys like my explanation, please do subscribe our channel and hit the bell icon for further notifications. Thanks a lot for watching this video.